Welcome everyone. We're glad you're here. This will be your binary options webinar for today. And we're going to discover what exactly are binary options. They're not new, just to give you the inside information. They have been around for many years, but you heard about them. You have some ideas. Today, I'm going to answer all the questions you have. I'm going to make sure you understand how to use them, what exactly they do for you, and what is the risk involved. Remember, in everything we do, there is risk. We just have to understand how we can mitigate that and use the asset or take advantage of any situation to make us better, to provide us with a better life. Not to go against us, okay? But to get there, we need to educate ourselves. We need to train ourselves. We need to give us the best opportunity. We want to have the odds in our favor. And this is very important. So, first of all, let me introduce myself. That's me. My name is Jose Ricardo Han. I'm a professional derivatives trader. I started my career as a junior stockbroker back in 2006, pretty much offering clients and corporations mutual funds, hedge funds, investments, and online trading. Over the years, I lived in Mexico City, Barcelona, and Costa Rica. One of the things I do in every webinar or every seminar is to explain the things I do and don't do. First of all, I don't do miracles. I need you to be willing to learn what I'm about to share with you. I'm just sharing with you a little bit of what I know and how I have seen other clients take this information and use it into their advantages. Okay? Now, what I will do for you is to take the time to answer all the questions you may have at the end of the presentation and explain in depth exactly what are binary options. As I mentioned, I know you heard of them, and there's a mix of feelings. What exactly, why they're so popular, and are they right for you? Well, let's find out together. I want to remind you that this webinar is brought to you by Any Option and in association with Traders DNA. I want to make a stop here and take you to understand how you have to use binary options exactly, and why they are a new option for you. Well, just make sure that everyone is, we have audio perfect, great. Okay, so I was saying, I want to make sure you understand how things have changed. Now, do you remember the Industrial Revolution? Everything was, at that time, everything was about manufacturing. But I want to take you on the journey and how things have changed. Now, communication, the way we communicate is different, right? Remember the time when we used to send letters? Then many years later, we had the phone. Between that, we have different communication systems. Now, eventually, after the phone, we have the mobile phone. And within the mobile phone, we have different applications that we use to communicate. You may remember when we use a lot the text. We were texting each other. Now we have WhatsApp. And now, of course, we have Facebook Messenger. We always evolve. You can, take that with the good and the bad, but we do evolve. Now, why this concept is important? This concept is important because it's exactly what is happening to the way we manage money, the way we treat our savings. It keeps changing. Now, 40 years ago, it was very easy for you. It was just about taking your money. You were educated to save a lot and get a house, and that was pretty much about it. Their circumstances were different. Now, we're no longer there. We are in a very competitive environment. Thanks to the era of negative interest rate and zero interest rate policies, savings are not receiving the benefit that they used to just by holding your cash in your bank account. It has changed. Now, let's have, that's pretty much the idea I want to give you. Everything is evolving, so it's time to evolve and find new techniques and new assets to manage your funds. You need to take control of your financials. Okay, great. Now, before we start, I want to set proper expectations in what I'm going to do step by step. First, I'm going to explain what binary options are. Okay, the concept of options is not new, what they are for. After that, I'm going to give you an idea between binary options and traditional assets. What's the difference? Then I'm going to discuss more about the current financial markets, the different situations we're facing, and how you can incorporate binary options. All right? And then I'm going to go over the platform, the any option platform, and between these topics also I'm going to discuss a very important idea, very important concept. We're going to talk about regulation and why it's important for you to work with a regulated partner. Okay? Great. Let's begin. So, first of all, let's talk about myths and facts. Now, there's one myth that you may have heard. Well, it's true. I'm not going to sugarcoat this for you. Are binary options gambling? Well, isn't gambling everything you do without a strategy or plan? Now, let's say for the sake of this example, you're looking to buy a house, okay? Now think about this. You're going to the real estate market. You know nothing about the place where you're buying the house. You're investing everything you have. You don't do any investigation on the property, who has the title or not, and you decided to acquire this property. Does that sound to you like you're investing properly or you're gambling your money? It doesn't matter. It doesn't matter the asset class. You're still gambling your money, although we are educated to know that real estate always goes up. We know now after the 2007-2009 credit crunch that that's not the case. All assets at any time may go down. It will depend on the conditions. Market conditions are always changing. So myth number one, gambling can be anything you do without a strategy or plan, and it has nothing to do with the asset you're looking to allocate funds. As damaging as binary options may be, this can be the same case if you do the same with a real estate property. Okay, so that's myth number one. Gambling, well, let's define gambling. Remember, it's not the asset, it's you. It's you that you need to have a proper plan and proper strategy. In strategy and out strategy, okay? Now, let's talk about facts. Why they're so popular? Well, it's a fact that they provide a very easy approach. Other asset classes, let's talk about traditional asset classes outside the regular risk levels. We'll talk about equities when you want to take a little bit more risk. We know bonds, okay? We know FX spot, and we also know CFDs. The last two are the most common so far derivatives that traders, investors have been using for the last probably 10, 15 years. Now, usually when you buy or sell equities, just to give you an example, you have to calculate everything. You have to set your own stop loss. You have to set your own take profit. Everything is based on a little bit or more research. But binary options at the very beginning, they will give you everything in front of you. They will let you know your risk. They will let you know your reward in one single picture. Of course, the whole idea of choosing if it's going up or if it's going down based on the option structure will be based on an analysis, and you have to go over this information to understand it better. But it's very easy to get into because you get all this information right away, and that's a fact. They are a very easy tradable asset class. That's very important. So So far, we have a myth and we have a fact. Okay, great. Now, why we work with options? Why institutions, banks, corporations, traders, speculators work with options? Options, first of all, they were created as an insurance. That's the purpose of the option. I'm just gonna covering options right now. Let's forget about the binary for a moment. We'll come back to it in a moment. But options are not new, and that's other myth actually. When people talk about binary options, they're something that they just created out of the blue. No, options as a whole, they have been around since 1973, 1975. That's right. More than 2 decades ago, they were created. And the idea was to protect. It was to offer an insurance, a solution to protect traditional investment portfolios. That's a little bit different from what you can do with binary options today, but just to give you a little bit of the background on this product. So imagine this. Let's say it's 1980 and you have your equity portfolio, bond portfolio. When you have market fluctuations and it looks like things are going south, sometimes what you have to do at that time is you just have to go flat. That means you have to get out of the market. Okay, you have to sell all your positions to avoid further losses. Now, professionals needed something to hedge, to protect themselves or from market turnovers. And they created this product, this leveraged product, a derivative, options. That's the name, options. So the options were created to protect the portfolio. So you don't have to sell at that time. If something goes wrong, you don't have to panic and you don't have to sell your positions, maybe because you have a long-term strategy. And then they were using these options to protect them from the downside. Okay? So they can collect from the options and they had no need to sell the equity. Okay? Very important. Now, when you work with options, there's a little bit of a trick. You do have responsibilities. Now, options, remember, are divided into two choices. You have the call option if it goes up, and you have the put option if it goes down. Their responsibility was if you actually go with a call option, okay, you have the responsibility to buy back or to sell the position if you have it. Now, if you go with the put option, you have the responsibility to buy back at a different or a lower, a very specific level. So you have two responsibilities at that time. With binary options, you are part of the gains without the responsibilities. And that's the simplest way I can explain this to you. You no longer have to worry about the responsibilities. You're just, in very simple terms, looking to, based on your analysis, correct? Based on your analysis and risk assessment, you're looking to profit from either direction. And the most important, with options, you don't require, with binary options, you don't require the market to make 100 to 300 points in one direction. Remember, it's just about whether it finish up, if you choose to go with a call, or if you choose to go with a put option, if the price of the asset finishes below. That's very important. Now, very good with paying attention to this information. I know you have a lot of questions. I'm going to go take, I already am reading them. I understand you're excited. We're going to continue and then I'm going to make a break and answer a few of those questions, okay? Great. Now, let's talk about binary options versus other traditional assets. Now, here's the interesting thing. Central banks, just to mention a few, we have the Fed, Federal Reserve of the United States of America. We also have Bank of England, BOE. We have the ECB, European Central Bank, RBA, Royal Bank of Australia, and many others. They define interest rate policies. But one thing you have to understand with interest rate policies is that they do affect the value of your investments one way or another. And we can no longer say what happens in Australia will not affect me. In today's economy, everything is linked, everything. So we're just in one world, and that's what it is. We are in the financial system, and we're all affected by the decision of the big players. Now, one of the things have changed since the credit crunch 2007 to 2009. It's the interest rate. We're coming from 5% interest rate and we're going lower. Now, this first step, it's called zero interest rate policies. Now, as the economy is not really growing, we're not in an expansion cycle, we're in a credit cycle that is going south. It means that is in a contraction. Central banks needed to boost the economy, their economies. So they needed to find new tools. So they created negative interest rate. Now, why it's very important for you to understand this concept. Think about it. 40 years ago, it was easy. It was about hard work. And I want you to remove that from your mindset. It's no longer about how much you work. Think about it. If it's about hard work, anyone working from 8 to 5 will be already rich. It's about thinking. It's about smart game. It's about being smart. Hard work is very important, but you also need to work with your brains. Okay, with your brain. That's very important for you to do. So, once again, go back in time. Let's go 4 decades. Let's go back to the past and think about this. So, I'm a hardworking. I work at the factory, remember? Still very, we live in a society which is based on manufacturing in the West before it goes to China and Asia, right? And you're working 45, 65 hours per week, okay? You're making a little bit of money, finishing very late, and then you're saving that money. You're buying a house, and things are looking great. Now, let's move forward to 2015, 2010, 2015, 2016. How things have changed. Well, now you can work very hard, but wages are not the same. So you're working very hard, but still not making as much as you were making 10 years ago, because the economy, it's different. The market structure is different. So as I mentioned, 40 years ago was easy. You can just go into traditional bonds. Just imagine, for example, war savings bond. In 1945, during World War II, we have different investment opportunities. But one thing that was very interesting is the fact that at some point, safe deposits were paying more than 10%. So it was an easy game. Savers were rewarded. Not now, because central banks have disrupted the market conditions, okay? So now it's time for you to prepare. It's not about working 45 hours a week. No, that's not longer applicable. We respect it, we can respect that, but the game has changed, and so you have to change the way you manage your money. So remember, now, if you look into bonds, and we'll come back to this topic, if you take a look at bonds and how much bonds are paying, do you think bonds can actually provide you into retirement with the very zero to negative interest rates that some of them are paying? Do you think if you keep saving all your hard-working cash and putting that into a bank account, Is that going to provide you for the future? Is that going to give you the future you want for you and your kids? You have to think about this. Very important. Let's continue. Now, let's think about this. People talk, when we talk about markets, financial markets, we talk about, I'm pretty sure you heard about bears and bulls. Well, that's just an idea, a picture, how to picture things in a concept. Remember this, and if there's one thing I want you to take away from this webinar, not only discussing about binary options, I want you to learn. I want you to understand there are only two things that may happen, will happen. Markets go up and markets go down. There's nothing else. Well, some people may mention that they go sideways, but still, that's just a very narrow range where still the market goes up and goes down a little. And that's what happens. There's nothing else. So if that's a valid concept, and that's exactly what asset classes do, we're talking from bonds, from equities, and we talk about equities, we may say Facebook, Alibaba, Apple, Heineken, Santander, Bank of America. When we talk about FX, we talk about currencies. The euro dollar, it goes down, it goes down, it goes up, it goes down. The exchange rate is adjusted, same as the British pound versus the US dollar. It goes down again, it goes up. Commodities, if we talk about the price of coffee, what exactly does the price of coffee do? It goes up, it goes down based on demand. But the price action, it's the same. So if that's the case, why not focus our efforts in understanding that very simple analogy? When the market is going up and where the market is going down. So I want to get in exactly the best moment when it has no more options than to go up. I want to approach this asset, and now I'm talking about binary options. I want to approach this asset in a very interesting perspective. I don't longer want to wait for it to go 100 pips. I just need to know exactly where's the best moment. When is the time right for me to look into the only direction it has to go? And that's why we will now know what is the most important variable in binary options trading. Now, what you're looking at right now is how the information will be presented. This is just a piece of the big pie, okay? You have two options in binary options trading. You have the call if it goes up. You have the put if it goes down. Now, in the middle, you will have the price, the asset price. Now, this is very important for you to understand. As I mentioned, you don't need it to go 100 to 300 points in one direction for you to make a profit. All you need is that at the time of the expiration, remember this, time of the expiration, your call or your put, they have to be in the money. What does that mean to you? That means, for example, if the price of the asset is trading at 80.22, just use the number. Don't focus on any particular asset, okay? For now. Let's say I go with a call. That means that by the time the option expires, all I need to have is the price, the value of the asset trading at 80.23. That's it. Just one small point. But I chose correctly, and now my option, my binary option, is trading in the money. Now, the opposite will be true. Let's say, for example, after your analysis, you have the idea that with all the information you have, the asset class, that asset will finish below 822. So you go with a put option, and all it has to happen for you to make a profit is for the asset class to finish at 80.21. That's it. You don't have to wait hours, days, years to realize a profit. Now, of course, it has a risk. Of course, the risk will be if you go with a call and the asset finishes below the price. You chose to go with the call option and the asset price is 80.22 and it finishes 80.21. Then of course you will have a loss. But to get there, as I mentioned, you have to educate yourself and find what it is the most important variable to make things work for you in binary options trading. Now, before we get that, I want to talk about a little bit asset diversification, because that's the name of the game. We don't want you to, I don't want you, pretty much, I don't want you to focus on only one asset class. What you have to realize is this: you never put all your eggs in one basket. Okay, that's the norm, and this is not gonna be a webinar when I'm gonna share with you something different. I'm just gonna go over this information again so you understand exactly why is that. So you invest in your education. You also have a house. You invest in your retirement account. And also you have adventures, you have trips. Some people think like vacations are just a waste of time, it's an expense, but actually you're investing in yourself, sort of recharging your batteries, right? Now, binary options and other asset classes, leveraged asset classes, derivatives, they're part of this. They are part of your portfolio. Now, the most important for you to understand is that each asset class has a specific weight in your portfolio. For example, if you're looking to allocate savings or funds into your binary options venture, because it's a leveraged product, you should be looking at something between 10 to 15% of your available cash. Remember, 10 to 15% of your available cash, no more than that. And that's just because if you're in the age between 20 to 35, you also have to sort of rethink what you're doing in a period of your life. You won't be putting all your cash into leveraged products if you are 55 to 65. At that time, you should be ready to be collecting. But the opportunity is for you to produce better returns for yourself, okay? That's very important. Now, let's continue. And as I promised, I want to talk about time. And that's right, time is the most important variable in options trading. You see, when we talk about equities and other asset classes, traders and newcomers, individuals interested in these products, all they want to know is, okay, how I make money, teach me how to buy and sell, Jose. What's the strategy? I don't want to know the strategy. Just teach me. Just let me know when I buy and let me know when I sell, like in autopilot. But we're not there anymore. That market structure has changed. Now is the time for you to understand what you're doing, to understand what are the options you have at your disposal, and how the asset class that you're interested in this case binary options, may work for you. Always making sure you have an idea, well, a clear idea in what is the risk involved. It's very important. But time plays a very important role in this scenario. It's different because the expiration date may work for you, may work with you as a friend, as an ally, or it can be an enemy. And I want to be very straightforward with you. You need to understand how time can be your ally. And that's one myth that I didn't talk at the beginning, but it's very important for you to understand that we take out of the equation that bankrupt argument that binary options are just gambling the moment we explore the time expiration. And one thing I will do in the next slides is to explain that you are not fixed. You are not prisoner of just choosing short-term expiration binary options. There are 3 time frames that you have available that as soon as you start approaching trading with those, your results will change drastically. Okay? The first time frame will be end of the day. The second time frame, end of the week, and the third time frame, end of the month. And having this information takes totally out of the table the myth that binary options are gambling. They are hedge solutions. But if you don't want to use them as a hedge solution for your portfolio, you can use them to generate short-term income. So it's about taking these variables and make them work for you, not against you. And remember, once again, the most important variable in options trading, binary options trading, exactly, that's right, time. Let's continue. Now, I'm going to take a break, and I want to talk to you about regulation. So you may be like, wow, this is boring. Why is Jose Ricardo why he's going to make a pause? Everything was going so well, and now he's going to talk to us about regulation. Well, this is as much as important as the product and what you can do and how much money you can make with it. Why? Think about this for a moment. If you're looking to start your own business, let's talk about, just give an example, a restaurant, okay, or a small bed and breakfast. Wouldn't you like to be working with the best providers? Wouldn't you like to have the best partners for your business? Well, that's exactly what you should be looking, what you must look when you want to start trading binary options. The best partner, the most reliable binary options broker. Why? Because they follow best practices. They have enough capital to run their operation. They look to hire the best people. The best people is, those that are willing to take the time to analyze your risk profile. Not someone that's going to ask you to bring all your savings to sell your house, your kids, and put that money back into the market. No, it's not about that. It's about working with people that have your interests at best. Okay? They want to provide a solution. Now, of course, you also have to be willing to accept the information, as you're doing during this webinar. You're listening to me, you're taking time from other activities to learn more, and that's very good. Cyprus. The flag you see right now is from Cyprus. Cyprus is one of the countries that in the world right now, financial markets, took the lead into the regulation process of binary options trading. Now, it's a beautiful island, and what they do is that they are taking the time to create the rules for all these companies to follow. And I want to talk about one important fact about the regulations, and it's called segregated accounts. Now, as you can see, there are rules, standards, requirements, law, policies, transparency, regulations, governance, everything that you can imagine. But the one thing I want you to take away, remember, always I want you to take, if you can only remember a couple things, like 3-4 things, remember, this is the second one. Segregated accounts. Now, why is that? A couple of years ago, it's very important you to understand and remember, a couple of years ago, financial firms, they actually play the game in a different way. So they said, okay, my company is $50 million. Okay? Now, when you go and take a close look to the books, you found that, well, 45 million are from clients' assets, and only $5 million were from the firm. And that was a big no, because anything can happen. Everything is possible. And if something were to go wrong, then that firm will utilize clients' assets to cover their liabilities. Now, that has changed. Okay, very important. It's no longer applicable. But I strongly advise you to whomever you're working with, whoever you decide to trade your binary options, make sure they go with segregated accounts. What does that mean now for you? Well, basically that the company is not allowed to say, okay, well, I have 50 million. No. How much is yours? How much do you have in asset funds? 2 books, one for the company and one for the client. So if you say you are 50 million, okay, how many millions of yours? Well, I have 20 millions. I have a liquid company. We are in good standing. This is how much we have. And then in client's assets, you have 25 million. Fantastic. If in the event that the company goes, it goes south, something happens, poor management, the liabilities are no longer part of the book that will affect the client's fund because they are treated individually. And only that regulation requirement for binary options brokers makes a world of difference for you as a trader, as an investor, as someone that is interested in the product. You have to look for safety of your funds. Okay? Always remember that. Well, that was a nice break. Let's continue. Now, as I explained at the beginning, I want to take a time to explain market structure, what is out there today, and to give you an idea. Maybe you haven't heard of this, but it's happening. Okay, so first, I want to start with Walt Disney. Okay, all of you know Walt Disney, right? You heard of them. You heard of that big company, Mickey Mouse, Donald Duck, all these characters. But what you also need to understand is Disney is a corporation, and they need to finance their operation. How do you think they do that? Well, exactly, be my guest. They have different investments, and they sell different investments to the public. And one of the investments they sell are bonds. Yes, they sell corporate bonds. Now, why this is important? I want to take you guys back to the idea of zero to negative interest rates. Now, before I continue, I'm going to tip you again here, and I'm going to talk about the risk-free rate. Now, I don't want to just go with a monologue here, so go ahead and let me know with a Y for yes and N for no if you heard about the risk-free rate. Ready? Go. Okay? I'm going to check your answers. Very good. I have a no here, another no. Yes. Perfect. No. Okay, so it seems, thank you guys for your participation. It's very good that you're paying attention. So it seems to be that the majority of the attendees don't know about the risk-free rate. Now, this is very important for you to remember. The risk-free rate relates to the U.S. Treasury Department securities, and those are 3: T-bills, notes, and bonds. Those are the main names based on their duration. Okay, now duration goes, for example, T-bills, they are very short term, notes between 3 to 5 years, and bonds more than 10 years going to 30 years. Okay, 30 years. Now, why is risk-free? Because it's pretty much what you can get, the interest rate that you can get from a security without any risk. Like saying, there's no way that you will never get back your money. Okay? So what are those rates, if you ask? Pretty simple. For short-term securities, T-bills and notes, we're talking about 1.5%. Now, I want you to imagine to loan your money, hard work money, for 1.5% for 3 to 5 years. How does that sound? Is that exciting? Are you excited to, just give your money away for 1.5% between 3 to 5 years? Think about it. Now, the bonds, long-term maturities. 30-year bonds from the U.S. Treasury, it's around 3%. Now, why I want you to understand this? Because Walt Disney became one of the most important American companies. And why? Great question. Because they issued debt at short-term, listen to this, 1.85%, and long-term, 3.3%. What is that? Very close to the risk-free rate. So in other terms, Walt Disney is actually, at this moment in time, first American company to do this, just like the risk-free rate. The quality of the bonds, the corporate bonds from Disney Corp are as good as the securities issued by the United States government of America. Something to think about. Now, pay attention that they're not paying more. They're actually paying less. And that's what I want you to think, that the interest rates are not going up. Companies are not willing to pay you more. They want to take your money for less. They want to give you a lower compensation that they used to. And they're taking advantage of that. Now, for those of you that have visited Germany, I know, and if you haven't, and you will eventually in a vacation, remember, you're investing in yourself, recharging your batteries. DB Bahn, the train company, very important organization, corporation in Germany. DB Bahn became one of the first, one of the first corporations in Europe to offer bonds, investments below 1%. The long-term securities, bonds offered by DB Bahn, Germany, are at this moment paying 0.006%. And that's right. I want you to write it down and take notes. That's exactly what they're paying, 0.006%. And I'm going to do an exercise with you. Okay? But it's not only in Europe. It's not only in the US. It's everywhere. In Canada, CIBC, Canada, banks all over the world. And we already have confirmations that NatWest, RBS, and other British banks are already communicating with commercial clients to let them know that negative interest rates may be imposed in their bank accounts. How would you feel about that? Now, of course, Plan A. Work very hard, save, buy a house, everything will be fine. It's over. We're no longer there, okay? So we have to recur to Plan B. What that Plan B looks like? Well, I will have to explain to you. Plan B can easily be binary options. That's what we're discussing this afternoon. But remember, there are other asset classes. Now, I want to introduce you to the Rule 72. Does anyone here understand or heard about the Rule 72? Please type on the chat a Y for yes, and or type an N for no if you haven't. Okay? Let's go. Okay? I'm going to review your answers. Muy bien. Oh, very good. A little bit of Spanish there. Very good. Very good. Excellent. Excelente. Muy bien. Okay? We have someone here from South Africa. Thank you for sharing. That's great. All right, so pretty much we have a couple no's and just a few yes. Okay, that doesn't matter. I will go over this information because I believe it will add value to everything you do when it comes to investing funds. Now, the Rule 72, it's a mathematical application formula where you're going to know exactly how many years will take you to double your money based on the interest rate you receive from that particular asset. Okay? It's very simple. You take the number 72, you divide it into the percentage that you are supposed to get, expected return that you're supposed every year from that asset class. Okay? And that will give you a number. That number represents, well, pretty much how many years you will need before you double your money. So, I have one question for you. Let's do this together. How many years will it take you to double your money if you take everything and you actually invest in DB Bank's long-term bonds? Okay, and I'm sure your math is as good as mine. So, okay, we have a couple numbers there. That's very good. And that's exactly right. It will take you 12,000 years to double your money. Now, I don't know you, but sadly, I don't have 12,000 years to wait to double my money if I invest in DB Bank. Do you have 12,000 years? I'm sure you don't. So, what solutions we have? Well, there are different asset classes, but let's go back to binary options, and I want to show you something very important. So you're raising your hand and you're saying, okay, Jose, you have explained everything. I understand now a little bit more, have a better understanding of the options. Options are not new. Binary options, what they do for me is basically to give me a participation into the investing structure without the traditional responsibilities. I know that they are regulated, okay, so I should look for the best partner. That means a binary options broker that is regulated. Now I know where are those. They're in Cyprus. Very good. You have explained that it should diversify. You have also mentioned that there's risk involved. I'm glad you mentioned that, Jose, because now I know it's not what they say. It's just all about rewards. I also need to educate myself and understand what are the risks involved. Okay, great. So what exactly is the solution that you are presenting here, Jose? I know those are the questions you have, and you are paying attention and you capture everything that I'm sharing with you, because it's not about me teaching you. It's about you be open, be ready to take this information and use it. So here's the solution. Binary options, because the current market structure are a valid, in this case, they are a viable asset. Why? Because first of all, number one, when you trade binary options, you don't have to put all your money up front. Let's say, for example, I'm going to give you a quick example before I move into explaining how the information is presented. Let's say, for example, you wanted to invest in Apple or Alphabet, or let's say Facebook shares. How much money you need to put in from? Just think about it. For example, each share of Facebook is around $125, $126, right? But with binary options, you may participate with as low as $25. Now, that's just one side of it. You can start building your account up to $5,000. It depends. It's how you want to start. For example, some brokers, equity brokers, they don't allow you to start with less than $2,000 or $10,000. This is just to give you full picture. So, when we look at the details and the structure of binary options compared to other traditional assets, we see that We don't have to risk all. We can start small, and we don't have to wait for the asset class to move up. Remember, to move up in one direction 100, 300 points, because you have two directions. Remember when we explained, when you saw on the screen the call, and then we have the put. So you can take advantage of rising markets, and you can take also advantage of markets that are going south, or pretty much the market is crashing, right? So you can take advantage of both situations. You're not stuck with one single direction, and that's very important because you need to be flexible. You need to adapt to the conditions. All right, so let's continue. Now, I'm gonna go over, just give you a little bit of the idea of what you may expect to encounter when you work with any option trading platform. And I want you to, be ready, because I have some great strategies to teach you on the next webinar in the next 2 weeks from now. We're going to cover timing strategies and tools I use to provide me with the best information to make my decisions before I start allocating my risk into binary options. Now, as I mentioned, this webinar is brought to you by Any Option. It's a regulated broker in Cyprus, okay, in association with Traders DNA. And here we're going to go over how you will see the information. Now, I'm going to take the pencil right now and explain this to you real quick. The pen. So we have the call and the put option, okay? We have the value of the asset. Now, see that we have different asset classes that you can actually participate. You're not only stuck with equities, but in this case you have currencies, the euro dollar, you have silver, and of course these commodities. We have Facebook here and Heineken, another companies that we know. Okay, very important. Now, see the size of your investment may vary. In this case we start with 75. We have 100, and here let's remove the pencil. One more time. All drawings. Move the pencil one more time. Okay. Let's just, okay, very good. Okay, so here we see we have another investment. It can be 200, and we can go as high as 400. Very good. Now, something that you will see in binary options that you don't have with traditional options is that you will have a percentage that, if incorrect, will come back to you. Now, this percentage will be adjusted based on the risk you take, and we will see that including the expiration date on here. Let's take a look here. Let's go back 1 second. Okay, so you can see here that based on the reward ratio, you have expected return if correct, and based on the reward percentage that you choose, you may have a percentage that will come back to you. Now, it will be different if you have a higher reward. The return, if incorrect, will be lower. Now, as I mentioned to you, we have different expiration dates. We look here, and for example, take a look at Heineken. On the previous slide, we have today for expiration, but also we have end of the week, okay? And in the case of Facebook, we have end of the month. So that will give you the opportunity to adjust your strategy. Now, let's go over a few ideas in how you can use binary options. Remember, it's about the execution. It's about having a plan. It's not the asset. It's actually you and the strategy that you want to use. Now, let's say, for example, in the case of the euro dollar, okay? So you have your bank account. It's full of euros, but you have the information. You conducted an analysis that the euro may lose value against the US dollar. So you want to protect yourself. You want to either protect yourself, or you want to make a short-term profit on this analysis. So if your expectation is that the euro will lose value against the dollar, which option are you going to take? Well, exactly, that's right. You're going to go with the put option. So you will go to your charts or pay attention to your economic calendar. Remember, it's not only about taking a look at the charts, but binary options are great for those that understand the fundamentals, the news. And in that case, the economic calendar will be your ally. Okay? Not only time, but understanding how the news will impact the exchange rate. Now, let's say, for example, Alibaba, right? So you are ready. You are allocating funds into their IPO. And at the beginning, things work out a little bit good for you, but now it's going nowhere. So you're stuck, let's say, with shares of that company. So you don't have a lot of cash available. So remember, this is very important. You don't have to start with $10,000. You can start with as little as $25, and you can start building your account. And you can take advantage of the short-term variations in the price of Alibaba to start making some money back from another investment that is not doing really well. Now, of course, let's talk about silver. Let's say that you have been reading a lot about the silver to dollar ratio, and you're expecting silver to make a massive move to the upside. So what you can do is that as soon as silver retraces, every time that it moves to a support zone, every time that the price retraces, then you can be looking to add long-term call options because you expect in the long term to it to recover. Okay? Very important, very good, okay? So as usual, something I do in all my webinars, seminars, is that I suggest further reading so you understand more. One of the things I want to share with you before we go into what we have learned is that we created a binary options fundamentals support group. It's part of the binary option masterclass. It's on Facebook. We will send you the link on the next email where you will receive this recording. Please feel free to join. There's no cost at all. Myself and another Tammy, member of any option, will be there to share with you articles, ideas, answer all your questions, okay? So my suggested reading will be to join the group so you can take advantage of the different articles we have. And if you have any questions, let us know. Now we'll go back and just give an idea of what have you learned. What have you learned? Tell me. Okay? Just make a quick comment on the chat box before we jump into the questions. Yes, we learned about the risk-free rate. Very good. Time. Exactly. Yes, it's true too. We learned about the risk. Everything is a risk. And how I avoid that? Yeah, how you avoid that? Well, what we discussed. Correct. You have to educate yourself. Remember, this was an entry webinar for everyone to know what it is, what exactly you can do, and the risk involved. Okay? The next webinar, we're going to talk about that. Now, for the purpose of the recording, because we have a lot of people that, because of the time, they couldn't attend to this webinar. We're going to send the recording to them. I thank you all for your questions. We're going to continue. I'm just going to close the webinar for the recording purpose, and I will take your answers, okay? And as I mentioned at the beginning, I will stay as long as I need. Now, on behalf of any option, in association with Shares DNA, once again, Jose Ricardo Hand, I thank you. Thank you for your time. Thank you for your participation. I know you had some ideas like clouds, and now we have a better understanding of binary options, okay? And as I mentioned, prepare for the next one. On the next one, We're going to go deep inside binary options, strategies, how to make money with them, and how to take advantage of the news, how to use economic calendars. We're going to go into the most basic strategies, support and resistance, how to draw lines, how to understand the behavior of the assets, and when to take a position. Okay? Again, thank you for your time. This is Jose Ricardo Jaén signing off and wish you well. See you soon.